No long intro. Market analysis. Now, today's video is actually one that gets me pretty excited because, as you all may know, for the past few weeks, if you guys have been keeping track with the channel, you'll know that I've been expecting higher prices on the dollar and lower prices on the euro dollar, and also higher prices on the dollar CAD. Now, well, taking a look at price action this weekend and actually taking a look at the KOT report, Commitment of Traders report, I'm wanting to switch my bias. The markets aren't reacting the way I'd like them to react. The seasonal tendency isn't as strong as I'd like it to be. And there are some other factors for me switching my bias, which is always a hard thing to do when it comes to having a bias and holding on to it. We tend to marry our biases when it comes to trading, but let's take a look at what Nassim mentions in his book Anti-Fragile. Of course, one of my all-time favorites. He says, when you want deviations and you don't care about the possible dispersion of outcomes that the future can bring, since most will be helpful, you are anti-fragile. Now, this quote is very fitting for today's topic. Although personally, I didn't want any deviations. I wanted to see the seasonal tendency play out perfectly, and that way I could appear to be smart, on YouTube. But it doesn't seem that's going to happen. But we've been working with the mindset of becoming anti-fragile. Although ideally we don't want those deviations, we don't actually care about the outcome, whether the dollar CAD goes up or down. As traders, me personally, I'm indifferent to it because on a daily chart, whatever it does doesn't change that much for me personally. Mainly because when I go on a 5-minute chart, I can still get in there and make something happen. So because of that, it's helpful wherever the market draws towards, higher prices or lower prices, as long as we can actually be able to get in there and profit from it. We are anti-fragile, which is one of the things I've been incorporating into my own trading for some time now. Being able to be indifferent from some of those outcomes. It's easy to marry a bias and not want to switch it, but from what I've seen this weekend, the markets are pretty clear, and we'll actually take a look at what I'm going to be looking forward to for the next coming weeks. Now, for market overview, we have to take a look at the economic calendar, which by all means is probably telling us to stay away from the markets this week. We have midterm elections on Tuesday. I believe we have CPI on Thursday. Wednesday, there's roughly no high impact news drivers at all, which can be a good thing depending on what kind of trader you are. And I believe we have Fed speaking on Thursday, and Friday is just a typical Friday, really nothing exciting. So overall, this coming week, I don't have high expectations when it comes to my trades. At most, I'll probably take 2 trades, if not 0, believe it or not. And we'll actually take a look at the seasonal tendencies. And of course, one of the most important things we'll be incorporating today is the PD array matrix when we actually take a look at the charts. So with all that being said, let's actually go to the charts and get this thing started. So we'll probably start with the dollar. Give me one sec. Take a look at the weekly chart here. And it is worth pointing out that up here, if you actually take a look at your monthly, you'll see that price is reacting off of a monthly somewhat of a bearish order block. It was a consecutive about 4 up close candles, and then we had a big move lower. So that certainly qualifies as an order block, and we're actually seeing price react off of that. Now, you take a look at your weekly chart here. Let me see if I can. We wanted to see higher prices, and I was expecting that, but price rejected from this bearish order block, which now poses an issue for us. It's like an obstacle almost, because price already showed weakness when it comes to not being able to trade above those highs. So we really want to see what this weekly candle does, because if price does end up trading lower and taking out this low, in all likelihood I'll abandon the whole idea and the whole seasonal tendency when it comes to expecting higher prices. But instead I'll shift my attention to this gap in here, which is very likely. If price ends up taking this low, the next draw on liquidity will be here. Either way, if it does, we have a really good range to work with. And if it doesn't, actually does ends up going higher, of course we'd like to see that also, but we're not married to any one specific idea. Drop to a daily. Now sell side was taken in here, which is one of the reasons why I don't actually want to see this go lower. I'm thinking to myself, if sell side has already been taken, there's not much reason for the dollar to be going lower, unless that's where the market makers actually want to take price. And I'm thinking perhaps that's it. See the reaction off of the bearish order block in here, and of course this itself turns into an order block. So you can see as we go on, this is going to be a one-sided framework where everything's basically going to be pointing towards lower prices, even though we don't want to see that. But if that's what the markets are going to do, we have to be indifferent to it. And we're seeing in here, I'm very curious to see whether or not this stays open, because if it does, let's say this daily candle has a bearish close, then we'll be left with a gap in here. In all likelihood, price will actually draw into it again before ultimately trading lower inside of here and ultimately lower down here. So we have a bearish order block in here. So very curious to see what price does inside of here. Because if price does trades up in here, then in all likelihood, we'll see price draw towards this low and inside this liquidity void and ultimately lower in here. Let's take a look at the weekly chart again. Down here at 107 400 or so, yeah. Drop to a 4-hour. It's about as low as where we're gonna go in this one. You can see the liquidity void in here. And this is the beginning of the bearish order block. So we can actually expect to see this thing probably trade higher and hopefully fill in the liquidity void and ultimately trade lower. Not 100% certain on that idea itself, but all indications are showing that price is actually respecting bearish PD arrays like this one. So this is a make or break situation, because if we do end up seeing this, then my bias will differ and I'll actually switch. Of course, as you look at the different time frames, you end up seeing that the real gap, or the one that price is likely to draw into, is actually all the way up here compared to it being down here. Because if you look on the 4-hour, it seems like the gap starts down here, right? But if you don't look at the hourly, let's say someone goes short in here, but price is likely to drop all the way into here, inside this this down close candle here, before probably going lower. So that's why I always like to use different time frames. That way I can actually refine my setups. So we'll be actually expecting that, and I'll actually move this in here. Now move this. What do you see? Oddly enough, it seems like the order block lines up at the mean threshold of that liquidity void. I mean, this is some wicked stuff. These are things, aren't things you can actually make up. Right in here. Although I'm open to the idea that price may stab a bit deeper into the order block, but we probably won't actually see that. Let's go to the euro dollar. Weekly chart isn't clean at all. Perhaps let me. See price reacting off of this bullish order block in here, but it's nothing good though. And when it comes to the euro dollar itself, after taking a look at the KOT report, we're actually seeing that the institutions are net long. They're actually adding more longs to their balance sheet, and actually reducing their short positions. And they actually did this on Tuesday, I believe. On Tuesday, while markets were about trading a bit lower, and then we see this nice rally into Friday. So I'm not sure if they actually want to take out this high right now, or if price is going to actually react from this bearish order block. So that gives us something to actually look forward to this week. This is the order block in here, and here is the mean threshold of the order block, which is ultimately where I'd like to find a setup. In all likelihood, if price does end up trading at the mean threshold, it'll probably have a lower close. So it'll look something like a wick. So wick in here and then close lower. And if I could actually get in there and get some kind of a short position in here, even if the market doesn't end up ultimately trading higher, off of that reaction, that rejection itself, I could actually perhaps get some pips or so. Not a lot, but just enough to get by. And we're actually seeing this in here, that same fair value gap that seems like it's forming in here. So when this candle closes, it'll leave this gap where we can expect price to probably return back to it, and then we could ultimately go long. So it gives us a lot of frameworks and different ways we can actually take advantage of this here. There's a lot of bridges you can build when it comes to what the markets are showing right now. It doesn't have to be completely how I see it. You can potentially look for a short in here like I would, or you wait for the retracement inside the fair value gap, or you can wait for the retracement inside the fair value gap, but you actually go long inside the fair value gap for higher prices. Or you can do the whole thing. And of course, as a daily chart, when you drop lower, there are many more opportunities. Let's take a look. So here's the mean threshold we want to see price trades into. And down here, we'd love to see price revisit inside of here. It's actually yep, here it is. Should drop on a hourly. So this is an area of interest. Once price ends up trading up there, then our next drawn liquidity would probably be down here, and ultimately it'll probably fit in here. So I would look for a wick just inside of this liquidity void, and then bounce right back higher. Let's quickly take a look at the CAD. Here it is. CAD did me dirty. Although I don't even trade it, but I hate to see my ideas not pan out like I'd wish. See price reacting off of a bearish order block on a weekly chart here. This is important. Although I failed to realize this, had I seen this beforehand, I would have probably switched my bias long before and perhaps capitalized on the drop lower. But at least now we see it, and we can actually take advantage of this moving forward. This is a swing high in here. High, and lower high. All the way down here we have a liquidity void, And when we drop to the lower time frame, you guys will see something very important. The reason why I'm switching my bias is because markets retrace lower, of course, that's good. A second time, alright, that's fine. But a third time, no, this is getting out of hand. And it did so without actually taking out any previous or important highs here. Had the markets trade lower after taking out this high, that would have made sense. But doing so right now is simply not a good sign. And it's doing so while leaving the same fair value gap. And this itself, this candle, taking out this swing low, is a break in market structure. I don't want to see it, but it's happening. And I can either get on board or get left behind. So at this point, I don't mind. It's simply a deviation. And if we are to become anti-fragile, we need to be able to actually take advantage of this. So this is the break in market structure in here. See price trading inside this bearish order block, which if you look back is the weekly bearish order block. So break in market structure. So next area of interest is going to be all the way down here. So I'm looking for lower prices on this bad boy. And it's like a triple top thing if if you believe in patterns like that. But I do actually think this will actually hold up. This is like a really nice swing high in itself. We have a high, and lower high to the right of it. So coming tomorrow, I'll look for price to trade in here, or whenever it decides to trade inside this liquidity void, and then ultimately go short in here for lower prices. Here it is. Boom. So we have a big range to work with. So you can potentially go long inside of here and take some partials as price fills in this SIBI, or you simply wait in here and then go short. Although I'm not encouraging any of you guys to start trading, because the markets are probably not going to be that friendly next week. So all these ideas are based on higher time frame premise, where we can actually expect to see all this stuff happen from, let's say, about 2 weeks from now, when everything lines up. So overall, this was a quick outlook, and I don't want to make the videos too long. I could talk about this for way too long. So I wanted to quickly show you guys what I'm looking at. And of course, I didn't drop anything lower than a 1 hour chart for personal purposes. That way I don't actually entice you guys to put on any trades you shouldn't put on. But yeah, I'm switching the bias. I mean, I don't actively seek deviations, but when you have a market like this that's screaming to go lower, I can't ignore it, and I can't force myself, to go long inside this thing when I know in all likelihood lower prices are probably what's coming. And to close out this mind map, let's see what ICT's outlook is on the marketplace for the coming week. On his Twitter, he mentions earlier today, this week, expect precision to be less likely. Daylight savings effect, give it a week to normalize, and be careful. Lots of things in the offing. I'm not even sure what offing means, although I ought to look it up, but I can only guess based on context clues that lots of things in the making, in the background. Yeah, there's a lot of different ways you can slice this thing, but I think I get what he's trying to say here. So word on the street is this week is not one of those weeks where you can expect to make, your typical RR. I'm gonna be very careful. Two trades at most, if not zero. Although I'm excited to see what the markets end up doing this week, I'm not married to any of those ideas. I can quickly shift my bias if the markets tell me to do so. So for right now, like we've seen and discussed, we want lower prices on the euro dollar for this week, and the dollar CAD, we want lower prices as well. And let me actually take a quick look at the futures markets. Yeah, because those are actually pretty. This is the ES. We have price traded inside this fair value gap in here. But one thing to point out is the fact that the NASDAQ itself hasn't traded inside this fair value gap, because the NASDAQ has been the weaker one, the weaker pair throughout this whole year. Oftentimes we see the S&P make higher highs while the NASDAQ make higher or lower highs. So in all likelihood, I'd like to see the NASDAQ actually trade inside this fair value gap, meaning as a result, the ES will actually go lower too, but not lower, but this will actually go higher. So by taking out this high, let me see if I can frame this a bit better for you guys to actually really understand where I'm coming with this. So I want to see the NASDAQ trade higher inside this bearish order block and inside the fair value gap here. And in doing so, it will really force ES to actually trade a lot higher, because this is the stronger pair. So it puts us in a really good position where I'm actually looking for longs. I think tomorrow morning I'll actually be trading indices and equities. Not a big fan, but my live account is funded with AMP futures, so I'll probably just see if I can get in and out tomorrow morning. But the main bias is because of this actually. This thing is wide open. In all likelihood, price is going to drop back into it, and in doing so, ES will also go higher. And the S&P markets are actually very correlated when it comes to EU. So if we're expecting the S&P to go higher, EU will probably go higher too. But if you look at EU, I'm really curious. Okay, does it go higher, trade into the mean threshold of this order block, and come right back down? Or does it take it out? Because if you look at ES, do we want ES to actually ultimately trade higher in here? Or do we want to see it go lower? It's very, very tricky market condition right now. So not married to any idea, and everything I'll probably be doing will be very short term, nothing long term right now. So with all that being said, guys, just be careful and happy trading. And hopefully you don't trade too much this week. I won't. I'm gonna actually take this week to mainly do some of my college projects as the semester comes to an end. Have exams coming up, so I'll probably be preparing for most of that right now. So with all that being said, good luck and good trading, guys.